It's official. The golden age of trading, that is now upon us. So according to Goldman Sachs, the golden age of investing, that is now over. We're no longer in an environment where you can just let your capital sit and expect that to deliver returns that will outpace inflation. You'll know this just from your checking accounts that your current return on your capital is not beating inflation. In fact, with interest rates now at the highest levels in over a decade, you can see that is not being passed on to the average retail. However, commodities, they are very cyclical. You buy low, sell high. You do this each quarter, rinse and repeat, and this is how you will crush it in 2023. It's no surprise that 1 in 2 people, they've now turned to trading to combat inflation. And this comes off the back of the energy crisis 2.0, which is brewing yet again, where you have oil prices, they've now surged 40% since the month of June. Everything that we've talked you through to anticipate, this of course has been further propped up by Saudi and OPEC with further output cuts until the end of the year. And now we've had it confirmed in the USA, they are now seeing acceleration in inflation at a red hot pace for 2 consecutive months in a row. And yet we still have interest rates which are continuing to rise. We have the FOMC scheduled to deliver their interest rate decision on Wednesday. Later on in the week we have the Bank of England, then we have the Bank of Japan. In fact, half of G20 nations, they are scheduled to give updates on monetary policy over the course of this week. And you know exactly the sort of environment that we're in right now, where essentially it is not buy and hold. You know this to be true. The environment right now, it essentially favors active management on your portfolio. It is not buy and hold. If all you're looking to do is get a good return that is going to outpace inflation by doing buy and hold, you're not going to hit your goals here. This is where you want to be utilizing the cycles for each commodity. Now, we've talked you through the whole playbook here in September. So as you know, in the first couple of weeks of September, we sold short platinum, gold, silver. All of these, they've delivered now in total over 2,000 points profit in just 2 weeks. Platinum sold off 9 consecutive days in a row in September. It had the biggest 1-week decline since November of 2021. This is a position that we've capitalized on massively with our clients at the Gold and Silver Club. Silver prices, they broke down 8% in 2 weeks, from 24.50 down to 22.50, where in fact we banked 200 points with our clients at the Gold and Silver Club. And gold prices, they broke down from 19.50 all the way down to 1900s for a 500 point breakdown in price over the first couple of weeks of September. We talked you through all of these trade opportunities to capitalize on. But what have we done now? We've now banked those profits on the sell side with reverse position, and we've gone long. We've gone long gold at $1,909 per ounce. We've gone long silver. We've gone long palladium at $1,215 per ounce. And we've also gone long platinum at the $900 per ounce zone. All of these trades have surged over the course of this week in the lead up to Wednesday's FOMC statement. In fact, the normal cycles that play out for this time of year, they're already getting front run by the institutions here, which is why we've started the bank profits on the sell side, reverse position and gone long. Everything that we detailed to you on the week ahead commodity report, that we were reversing position and going long into multiple commodities here. Alongside the metals, you've also seen energy prices. Natural gas, it surged 3%. We remain long natural gas. And as you know, we've hit our profit target on crude oil. We continue to see this market trade at the highest levels in 2023 so far, up over 40% since the June low, where we are buying into Brent crude oil at $73 per barrel. Very straightforward opportunities for you to capitalize on. And you've also got copper, which is coming back down to areas of liquidity as well. This is going to be an opportunity to keep an eye on. Just last week, I talked you through opportunities on palladium, which is broken out over 500 points. We've locked in 500 points so far with our clients at the Gold and Silver Club. I talked you through platinum, that I like it for our buy opportunity at $900 per ounce or lower. Platinum broke down to $897 per ounce ahead of last week's CPI data. Since then, it's broken out 450 points to the upside. So I hope many of you have been able to capitalize on the back-to-back opportunities that we've seen over September so far. Already, just in the first couple of weeks of September, we banked 2,000 points profit with our clients at the Gold and Silver Club. You know the calculation, but just in case you don't, For every 1 lot contract you'll be trading, that's $20,000 of profit. For every 10 lot contract you'll be trading, that's $200,000 of profit. That's just in the first couple of weeks of September. And this week we have back-to-back trade opportunities with Wednesday's FOMC statement and Thursday's Bank of England decision. And then later on in the week, we also have the Bank of Japan amongst half of the G20 nations, which are all scheduled to give updates on monetary policies. There's going to be back-to-back opportunities for you to capitalize. And then we're going to be hitting Q4, one of the most profitable quarters of the year for commodity trading. October, November, December, very clear playbook in the final quarter of the year. Once you're hitting a new quarter, fresh capital inflows, there are going to be more back-to-back opportunities for you to capitalize on, which you definitely do not want to miss out on. And of course, this is going to come back down to utilizing data, statistics, market intelligence. If you're not making money in the markets right now, you absolutely should be, and you need to be making money in the markets. Further interest rate hikes are due later on this week. We've already seen it from the European Central Bank last week, and that's not being passed on to the average consumer who has capital in money market accounts or bank accounts. That interest rate, it's not going to get passed on. This is where you need to be actively managing your portfolio in order to beat inflation. You want to further compound this with the capital flows in the market, understanding the key areas of liquidity so you know where to enter into your trades and when to bank your profits at the right point in the cycle. Further understand the intermarket correlation so you understand where the capital is flowing over each quarter, which commodity would be best to capitalize on, which is going to lead, which is going to lag. This will help you massively. And then of course understand the macroeconomics, the fundamentals, the narratives, and then further compound this with how the hedge funds, the money managers, the banks, the institutions, how they're all positioned in the market in real time. This is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.